when we're kind of looking ahead to the next year, I mean, we kind of think about the drivers that provided us with a very strong support for stocks this year, and it was okay corporate profits. That was a good support, and normalization of monetary policy, and particularly in US. And I think we're still in that world where corporate earnings are being strong. We see positive earnings revisions overall, and policy is normalizing. So I think that at least like in foreseeable future, before events start hitting us, we are very constructive on outlook for next year.
You're very constructive for next year. And let's talk tech then, Marija, because you're always such a supporter of tech and you're always a big fan of tech stocks. Now, you say in your notes that there is still no alternative, and I'm sure you'll have reason for that. But just to throw a little counter at that argument, I've got a chart here that shows the S&P...
She's done her homework, Marija.
Well, I'm sure Marija will have an answer, which is why I'm doing this. S&P 500, you know, most recent part of 2020, I've got the fourth quarter, basically, on this chart, which shows the S&P 500 and what's happened to tech stocks. And actually, it's been healthcare and banks that have been doing really well of late. And so I wonder, is it still right to make that argument that there is no alternative to tech stocks?
Yeah, okay. So there are two parts to this argument. First, I mean, I do believe that tech is probably going to lead next year, but healthcare is another very interesting conversation we can have. I mean, starting with tech sector, I mean, the reason we love tech is, I mean, we still strongly believe that earnings growth would be the key driver of relative performance in the market. We still think that sectors and styles and countries where earnings growth is stronger than somewhere else will continue to kind of garner investor support. That was true for the last couple of years. Yes, it drove valuation to kind of very high levels. And you can have like this wonderful chart of looking at earnings expectation versus valuation. And yes, tech is expensive, but it's the one sector that's expected to grow very, very fast. Everything else is trading at a discount because earnings growth is slow. And I think we still not seeing that dynamic changing. So that's kind of your case for tech. I think healthcare is really, really interesting. Up until kind of start of summer, it was the biggest underweight institutional investors had in our custodial database. Investors were really, really negative on the sector. And I mean, there is kind of, there are lots of fundamental challenges with the sector, but it was a huge regulatory risk. And it's beginning to change. And we saw very strong investor buying, and absolutely correct, that was the best performing sector in Q4. What we're seeing a lot of it is position adjustment. So you start with a huge underweight, prices start to go up with a little bit more M&A activity happening in the sector. We see a little bit more. I mean, you just mentioned some more drug kind of permissioning in US happening. So prices start to go up, and people who are underweight the sector, which we know it's a huge position, they begin to buy. Price goes up, they begin to buy. So it creates its own momentum. And we're still in a very, very underweight territory for sector holding. So yes, healthcare looks an interesting sector for us. Not so much that fundamentals really improve, but it creates this kind of position unwind and kind of short squeeze in the sector. So we're still there.
But Marija, what is your answer to those who question when the capex into AI is going to translate into productivity gains and big juicy returns?
Yeah, no, that's a kind of not even $1 million, $1 trillion question. And I mean, I think what's important for investor is that who would be the beneficiary of this capex? I mean, we hope that a new technology is transformational and it's multi-decade improvement in productivity kind of going forward. But in the medium term and short term, who benefits? And for now, it's really the people who kind of, I don't know, picks and shovels, the kind of infrastructure build up. That's those companies already benefiting. Think of kind of NVIDIAs of this world or Microsofts or Googles of this world, people who provide infrastructure for AI. So for them, the path to monetization is much clearer, much easier, much more transparent, and those companies, in our view, that's easier case to make in terms of monetization. What will happen later on? I think we still need to technology needs to develop, and their kind of case needs to be proven. But those mega cap companies that are doing majority of investments, for them the monetization case is a lot clearer, and that's what they're kind of trading on.